afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines at this hour. Indian markets give up most of the gains posted in the morning session but are still managing to stay in the positive. Indiabulls group stock slump with Indiabulls real estate hitting the lower circuit intraday. IRB Infrastructure is another stock facing selling pressure after Economic Times reported that the NHAI is looking to rebid the tender for the Mumbai-Pune Expressway. And Om Birla is selected as the Speaker of the Lok Sabha. His nomination was unopposed. Good afternoon, Agam. Clearly, the benchmarks have given up the morning gains, but the carnage one is seeing in broader markets, there seems to be more than one's reading now.
Yes, Navneet, it's not something that may have gone down very well with investors, considering the Nifty is really not telling you and giving you a correct picture of what's really happening in the broader markets, considering we have seen so much weakness here. And of course, the Sensex and the Nifty were moving largely in tandem. What we've also seen is a lot of these benchmarks giving up the early gains that we saw. In fact, at one point in time, we were seeing 1% gains for the benchmarks. But this is where you see the real picture when the mid-cap and the small-cap indices are actually declining by as much as 1%. And there certainly is a lot of weakness in those indices. Another thing that stands out here is the advanced decline ratio has turned for the negative. And for now, we have nearly 4 declines for one advance, which means that there certainly is a lot of selling pressure in the broader markets. To take a look at your the heat map. For now, we are looking at severe weakness in Indiabulls, Housing Finance, Yes Bank. UPL is looking at significant selling coming through. Tata Motors, Adani Ports, IOC, all of them declining by nearly 3%. On the gaining end, Tata Steel is one of those stocks which are advancing. And, if you actually go by the heat map on the Nifty 50, it is not going to give you the exact picture of what's really going on in the broader markets, considering the advance to decline ratio is not that bad on the Nifty 50. But it is the broader markets. That's where the most of your concerns are. And the real question is, what do we do in these markets and where do we go from here? I suspect the futures and options markets will certainly give us a little bit of an idea. Navneet, with that, it's over to you.
Thanks for that, Agam. And even if you look at the futures and options market, for last few sessions when the index was tumbling, we didn't see any fresh shorting coming in, neither on Nifty futures or in Bank Nifty futures. The fall was largely a function of unwinding of positions which existed in the market. So right now, as we speak, Nifty is already slipped into the red. It's down about 13 points, and the futures are indicating with regard to open interest an uptick of about 4 to 4.5%. But these could be intraday position which can be closed towards the end. Pull up the Bank Nifty futures. I think Bank Nifty was holding about outperforming so far, still in the positive, but it's given up majority of its gains, and the futures continue to trade with a discount of about 20 points. Last 2 days has been unwinding on the futures side, but today we are seeing some bit of increase of about 9% in terms of OI build-up. We had a gap up opening this morning, and India VIX had corrected, but that too in the intraday session now, with markets giving up most of its gains. VIX is also inched higher, which is sitting with gains of about 3%. In terms of positioning now, what levels one should watch out going ahead? Remember, tomorrow is Thursday. You've also got the weekly options expiry for Nifty, Bank Nifty options. And for Nifty, the maximum open interest on the call side has shifted to 11,800 from 11,900. On the put side, it is at the 11,700. So definitely in the last 3-4 days, the base for this market has moved lower. But specifically in today's session, we are seeing call writing coming in for the 11,800 strike. And let me tell you, when the gap up opening happened in the morning, there was largely unwinding on majority of these call strike. And intraday now, there is a lot of addition when it comes to the option strike on the call side. Now, 15 lakh shares added on 11,800. The 11,750 strike has added nearly 9 lakh shares. On the put side, major addition so far has been seen at the 11,700 strike, and on the downside, once again, I think the 50 DMA of Nifty will be in focus, which is at 11,680, and for Bank Nifty, it is at the 30,200 level. Remember, Bank Nifty has not breached the 50 DMA, which Nifty did this week. Stock specific, we've been talking about IRB Infra. It's touched 52-week low. It's fallen on very heavy volumes on the cash side. In fact, if you can just pull up the AVAT function of Bloomberg, that's the white line time is projecting today's volume as compared to average volumes that were seen in the last 20 sessions. That's the blue line for you, which is telling you the stock has fallen on good amount of selling in today's trade. But on the future side, significant amount of shorting has been seen as the open interest has risen. The stock for the month is down about 24%. The other one, the Nifty counter, which has been in focus, that's Indiabulls housing hitting 52-week low almost every single day. Now this too is down about 28% this month, and futures action in today's session is indicating that the traders are creating fresh short positions even at 52-week low levels. One stock which is outperforming is Canfin Homes. It's managed to hold on to the gains that we've seen in today's session after promoter Canara Bank board yesterday has given go-ahead for stake sale if the market conditions permit them to do so. The stock was up in yesterday's trade as well, so it's up for the second straight day, and it's been trading above all its key moving averages. So net, I think, Agam, the picture remains largely the same. Nifty is not seen that sort of correction owing to few stocks, but it's the broader market where major action lies.
Right. Well, of course, we are going to see some sort of movements for the benchmark indices, not only in India but in Asia, too, based on the FOMC meet today. So let's begin with a global event. We do have the Federal Reserve, which will be announcing its policy decision later tonight. And the US President Donald Trump has been mounting the pressure on Fed Chair Jerome Powell to cut interest rates. But will the FOMC bow to these demands? Well, at least, some economists are penciling in about a 50 basis points cut tonight. If that happens, what are the likely implications? Well, we're in a conversation with Raina Michael Preiss of Taurus Wealth Advisors. Raina, good morning, and thanks so much for joining in. What are you making of, one, the possibility of a rate cut to the tune of 50 basis points? And secondly, how would you then evaluate, the way markets can shape up?
Yeah, look, I mean, I think Chairman Powell is in a rather difficult situation, because if you think about it, it's almost like the proverbial you're doomed if you do and doomed if you don't. Because if you think about it, why would you cut rates aggressively when the stock market in the United States is close a couple of percentage points away from all-time record highs? And if the argument would be a preemptive cut, that potentially the trade war could escalate further and the economy is potentially weakening even more strongly and accelerating to the downside, then maybe that interest rate cut that everybody was bidding up in the stock market might actually turn around to what is often referred to as buy the rumor, sell the news. Because what does the Fed know that the average investor doesn't know? Is the economy much weaker than most people would currently believe? So I think it's a very tricky situation in the markets, and maybe there's too much expectation built into this interest rate decision. But the consensus increasingly seems to say that we might actually be on hold tonight, but in July we might potentially see a cut.
Hi, Raina. In fact, that's the expectation from market side, that this policy, they could just clear the way for a July rate cut by downgrading their economic forecast and also tweaking the language in their statement, because we've seen a rate hike actually from Federal Reserve in the month of December. So it's central banks, Raina, around the world have been now on easing spree. In fact, yesterday Mario Draghi of ECB also suggested that they could increase the time of stimulus in order to support the economy. Do you then foresee the risk off environment in global markets?
Yeah, look, I mean, in my mind, the biggest risk is that the so-called politicizing monetary policy. I mean, last night, Mr. Trump's comments with regards to the ECB and the ECB cutting, basically implying further stimulus, unfairly leading to euro weakness, which is inconveniencing the United States economy and US exporters. I think it's very dangerous if we go down that road, because by definition, by statute, central banks should never really be too politicized, because then again, we're going down a very slippery road. And that's really the danger that I see. I think the other question here is, everybody knows about the China trade tensions, but what if these trade tensions increasingly move on toward Europe? That potentially would be net negative for risk assets. So I think it's a very delicate moment, and I think it's important to sort of step back and also look at the message of the bond market, because the bond market, government bonds in particular, seem to imply that there are concerns about economic growth. And that just hopes of interest rates cuts don't necessarily mean that it's smooth sailing from here.
Reina, so how are you anticipating the movement of funds across and between developed economies as against emerging economies now?
Yeah, look, I think we might increasingly look. I think anybody who just thought that the US-China trade war is about trade might actually increasingly realize these are a clash of civilizations, and increasingly there's no easy fix to a very complicated issue. I would say that, for example, certain countries like India in particular, and to a lesser extent even Germany and France, might actually benefit if the US would hike tariffs further on the Chinese, and especially the Hong Kong question would be very important, because if Hong Kong would change this sort of autonomous status as far as the US is concerned, that potentially could lead to major rebalancing around the world. So I think that other markets might actually benefit out of this. And India could be one, Vietnam could be one, but I think also certain European countries in this net new trade war world might actually benefit. But in the meantime, I think for the second half of the year, we might actually see increased volatility. That one way straight up since the December lows, most probably I think now will be met with sort of more volatility, while the market is trying to figure out whether the bond market signals are correct or the equity market signals are correct. Because as you know, they send a very contradictory message to investors.
Reina, in light of central banks around the world being on easing mode, would you then expect more money flowing into emerging markets? Because if there's no rate cut coming from this policy tonight, there could be a rate cut coming in July. At least that's what majority of the economists have been factoring in.
Correct, and yes, I mean, if you think about it, also I think the key question, also, I mean, all of the discussion about the trade wars is also fundamentally a currency question. So, should the dollar weaken, this potentially could be good for emerging markets. So again, I mean, that's basically, I think, also why I think Mr. Trump got so upset yesterday when the euro suddenly weakened, because I think from their perspective, to bring jobs back to America and have more American exports, I think the Trump administration might actually prefer a weaker dollar. So from that perspective, that would be net positive for emerging markets. But don't forget, it's ultimately about growth. Which countries in the world have strong, fundamentally based economic situations, and countries where you would like to invest for the long run? And that is increasingly still in emerging markets, because as the ECB told us yesterday again, that even after many stimulus effects and so much QE in Europe in particular, the economy is not really moving. So I think more and more investors will look at emerging markets, because that's where the growth is.
Reina, you know, the other aspect here is, and this is perhaps not to do with the FOMC meet today, but well, we are getting confusing signals from President Donald Trump, and especially when it comes to tariffs with China. And of course, in the latest, we've had a perceived positive development. But how are you seeing these things, and what is your reading into these issues?
Look, I mean, my reading is that the biggest issue, and in any context, trust is the most important currency. And the more often you change your views or positions, whether, I mean, the Mexico example is a good example, trust can be broken easily, and then increasingly it will be more difficult to come to better outcomes. Because if people or investors in particular don't trust any of these statements anymore, then the signaling effect will be broken. And that's the real danger that I see, that you do these announcements too carelessly, too often. It might actually lead to nobody listening when they should be listening. And I think that's the danger that I see. That's why I also expect higher volatility in the second half of this year.
Reina, before we let you go, on India, the focus of both the central bank and the government has been on growth. In fact, India has been ahead of the curve. We've already had 3 rate cuts coming by, but growth has been a major concern. Recently, Fitch downgraded FY20 growth targets to about 6.6 from 6.8. So can this be the biggest hurdle going ahead for India in terms of more money flowing into our markets?
Most probably, yes. And I think, again, I mean, if you remember when Mr. Modi was elected first time round, it was on this belief that we see a lot of reforms, and global investors love that and bid up Indian assets. And in terms of price-earnings ratio, Indian equities are rather expensive or elevated compared to other Asian markets. So I think what investors would like to see further commitment to sort of further deliberalize the Indian economy and have more reforms. But otherwise, look, the long-term investment case is very compelling, and especially if we go into a sort of more tripolar world where increasingly the Chinese work with the Russians and the US is taken on the European Union, India could be one large country that would actually benefit out of this confusion and potentially changes in trade flows. So I think India could long-term be a real winner out of this. Also because I think many people would have to reevaluate their China investment strategy if, for instance, the tariffs would go up, if there should be any failure in this G27 meeting. And India would be one market where potentially we can see flows out of China, potentially into India, where people on an asset allocation decision basis increasingly think about increasing allocation to India at the expense of China.
Okay, well, okay, Reina, we leave it at that. Thank you so much for joining us and taking us through your views on the markets across the globe. And of course, we're going to keep an eye on the FOMC decision and the implications that may have on the markets. But moving on, auto dealers have had a really rough ride over the past few months, and the goings not getting any easier. Now companies are hoping to see a sharp uptick in demand from August, but the dealership data shows inventory remains high. Joining us to talk about the greater details, two dealers from two different parts of the countries. We have Jerome Powell, who runs a Maruti dealership in Kochi, while Nikunj Sanghi has the Hero MotoCorp dealership for Alwar in Rajasthan. Gentlemen, welcome to the show, and thanks for joining in. John, let me start with you. How are you seeing trends change, if at all there is a trend change at all, over the past few weeks as compared to what we have seen in the months preceding them?
See, from May onwards, I see a slightly positive trend, and the markets also see. It's not that the number of sales is increasing drastically, but what is happening is inquiry levels have started to improve, and we feel that in some time, see, what's restricting people from buying probably is getting credit or finance. Otherwise, the aspiration and the inquiry levels still remain.
Okay. In fact, if one were to look at the data which was released by FADA just a few days back, there was a degrowth which continued for the second straight month of this fiscal, and all the categories of automobiles saw lower sales on year-on-year basis. Nikunj, if I could come to you on this one, there were 8 states which reported growth in the month of May, and Rajasthan featured in that, where growth of about 2% was seen on year-on-year basis. Tell us, what's the scenario in your state? What are the entry levels that the dealers are sitting on now?
So inventory levels have not gone down very much. I mean, we continue to be sitting on high inventory. But for Rajasthan specifically, the first quarter, which is the April-June quarter, is extremely important. One, because it is post-harvest. Two, because it's the marriage season. And I think that is the reason why Rajasthan has shown a reasonable amount of growth as compared to a lot of other states. But inventories definitely continue to bother us. And
Nikunj, just to follow up on that, so Rajasthan saw growth of about 2% in the month of May, but do you expect this growth continuing? How has the month of June been so far for your state?
So even June, I think, is not better than May, but definitely we are keeping up with how we have done in May. But going forward, I don't see a very good quarter coming in, which means the July-September quarter is not going to be a very good quarter, because I guess monsoons have always been, they dampen the demand in the auto market. And monsoons are immediately followed by what we call the Shraddh Paksh, or the inauspicious period, when nobody buys new things. So I do not see the second quarter to be a very positive quarter. And in this depressed sentiment, it's probably going to be worse than the second quarter in the previous year.
Okay. Well, John, if I can come to you. on this one. In terms of sentiment too, has there been some sort of an uptick in sentiment? Well, if you compare perhaps the last few weeks as compared to what it was in perhaps January, February. And secondly, in your opinion, based on your past experiences over the decades, when and how do you anticipate this improvement in sentiment? Where could it come through, and what factors could determine this improvement in sentiment?
See, some of the reasons that the whole sentiment has been negative or not too good, not positive in that case, would be because in the last couple of years, there's been a rise in prices of all cars due to various things, from BS3, BS4 times onwards, plus insurance. All this has added on to the cost of the car, and this has probably got a set of people out of that buying area. You know, the lowest rung or even the entry levels, people have gone for a lower level. And this is what has been happening, which I feel with the present government, new government coming in, and if they consider the request from Sayan and other people for lowering of the GST, that would probably, rationalizing GST would definitely improve the sentiment a lot, because that could cover the price difference that has happened in the years, and that could happen with the introduction of BS6, which will boost the level of not only inquiries, but finally retails will also happen that way. And for us, the next quarter usually is our best quarter, because Onam comes in during this time. And everyone feels that this Onam could be better last one, which got washed away in the floods. But we are hoping that it will change. And as I said before, May and June are not very different, and I feel there's a small uptick in how people come in and request for or come in with the inquiries.
Okay, well, GST reduction is a common request, I guess, of the industry players in the auto pack. But remember, there are a lot of factors which have led to the slowdown this sector has seen in the recent past. And one of them has been the liquidity situation. So, Nikunj, if I could come to you, while the other factors have definitely played their role, but tell us how's the liquidity situation and how much of that has worsened the slowdown that we've seen in the sales?
If we look at the basic facts, then all the financiers are present. All the financiers who were in business on our counters continue to do business. But what has changed is their risk appetite. So if as a financier I was willing to do a 90% funding on a vehicle, I think I've reduced it to 75 or 80%. If I was willing to look at a small deviation in the CIBIL, I'm not willing to look at that small deviation in CIBIL. So I guess the risk appetite has reduced, and some of the risk which most NBFCs were taking, I think they've stopped taking that risk, and they definitely are also pushing up costs of funding, which means that the interest rates are going up in spite of the reduction in the bank rates. So it's not getting passed on to the consumer, and it's not helping the cause at all.
Okay, Nikunj, in your experience, again, what factors would prove that there is a little bit of an improvement, or there is a willingness to go ahead and at least consider perhaps an increase in inquiries from here on?
See, I think, like John said, initial cost of acquisition of a vehicle is becoming detrimental. Now, with increased focus on safety norms, BS6 coming in, we are looking at price increases. Some manufacturers have already started announcing a price increase from 1st of July because of some new safety norms which are coming in. And I don't think manufacturers have the capacity to absorb these costs. And insurance third-party premium has been raised again. So I think these are all negatives unless the cost of acquisition is looked at along with liquidity. I don't see a very positive sentiment building up. Even in developed nations, cost of acquisition is becoming a problem. And if you look at the US market, the European market, I think in all the markets are reporting that because of the initial cost of acquisition, vehicle retails are going down. So if that could happen in developed countries, I'm sure an emerging market like India, the customer is far more sensitive to cost of acquisition than the developed nations.
Okay. We've already discussed about high inventory levels. John, I want to come to you for this one. What are the dealers doing in your state in order to clear the existing inventory?
See, I think the manufacturers also have become very conscious about inventory, and they've been trying very hard to bring down the inventory of the dealers, and in that way, the cost to the dealers. But what we are generally doing is, okay, there are discounts going around, not only from the dealer level, but even the manufacturer has extended certain discounts for the market. And plus, we are working much harder to sell the same number of cars. But I think these things have helped.
Could you just give us a range if there are discounts being given in order to clear the inventory? What sort of discounts are the dealers giving right now on different sort of vehicles, be it two-wheeler, four-wheelers?
Okay, for the four-wheelers, generally, even for a small car, the discounts have been going up between 50 and 60,000.
Okay, fair enough. I think we leave it at that note. Nikunj as well as John, appreciate both of you joining us today and giving us the ground reality check of your individual states as to what's happening with regard to higher inventory levels and how the registration have panned out, at least in the month of May. So net across the country, I think there was a slowdown seen in terms of registration, but in Nikunj's state and Rajasthan is what he highlighted. I think the number of vehicle registration, it went up by 2% on year-on-year basis. But shifting focus back to markets, Nifty's at about 11,680, so we've gyrated about 1995 points. I think just briefly in the morning session, it had touched the mark of 11,800. Bank Nifty is sitting around the mark of 30,400. Good time to bring in our technical experts and get their view whether one should use this correction to create any position either on the long side or on the short side, because this market has been really volatile. Manav Chopra of Indiabulls Ventures joins us on the show now. Hi Manav, good afternoon. What do you make of the volatile moves that we've seen? It looks like India-specific issue now, because despite of a gap-up opening, we failed to maintain those levels. Would you venture out and take any position right now?
Yes, in fact, we've seen markets being quite volatile, but trading with a negative bias. The Nifty index has breached its important weekly support zone, and today we did see a short-term recovery towards 11,800, but it did not actually sustain above those levels, and which will act as a strong resistance for the markets going forward. So as long as the Nifty index is trading below 11,800, 850, I sense the short-term selling pressure would be there in the markets. On the one key pivot support for the markets would be yesterday's lows, which is 11,650. So I sense on the immediate basis 11,650 is a very crucial support, which also coincides with its recent gap pattern. So as long as those levels are holding, we can expect a range bound volatility, but the overall short term trend is definitely quite negative. And also the Bank Nifty support is at 30,200, and once if that is violated on the lower side, we can expect some short-term decline going forward. So keeping this play, I have two picks. My first call is sell on KTK Bank, basically from the PSU banks. This is one stock which has it has seen a near-term underperformance and has breached its important support levels. The overall trend and the oscillators are still bearish. I recommend a sell into this with a stop of 104 for lower targets of 95. And the other pick is buy on Havells. Basically, we've seen a good outperformance in this stock, and it has breached its important daily support. The overall trend has been quite positive, and Havells overall has been a bellwether in such market conditions. So keeping that play and the overall trend perspective in picture, I sense one can look to buy this. A tight stop loss for Havells 770 on the lower side for an upside target of 810.
Okay, well, we also have Amar Singh of Angel Broking joining us on the show right now. Amar, good afternoon. Thanks for taking the time out. What's your reading on the benchmarks? They've clearly lost out from intraday highs now, but at least the Nifty is trending in the red. What do you make of this move?
Yeah, good afternoon. What we are witnessing in Nifty, and earlier also had stated, is that on the daily charts, we've definitely seen a decline in the bullish momentum. And over the last 5-6 trading sessions, some of the indicators have gone negative. So that's the reason where any pullback is being used as a shorting opportunity. And also the psychological 12,000, 12,100 mark that continues to act as a resistance, and also ahead of the budget. So I would say there's some caution definitely. And technically, it was already being seen on the charts that the bullish momentum on the short-term charts that was waning. So that was one of the factors. Technically, if you look at it, somewhere on the downside, Nifty's got a good support coming at around 11,600 levels, whereas resistance on the upside is at 11,850. However, what we are seeing on the daily charts, the patterns which are there on the daily charts, clearly now shows that upside will be met with selling pressure and profit booking, and there could be some consolidation. As long as we don't see a break below 11,600 levels, I don't think there's much cause of worry. On the upside, 11,850 could be a crucial resistance zone, and however, it's in on daily charts, it's moved in over sold territory. So we'll see bouts of up move, but again selling at higher levels. So Nifty could definitely get into consolidation. Looking at Bank Nifty also has a similar pattern, and there also we've seen a decline in momentum. And on the downside, if you look at it, Bank Nifty somewhere around 30,200, that's a good support level, whereas on the resistance side 30,850. So I would say again it's going to display choppy trading sessions both in Nifty and Bank Nifty, at least in the short while.
Okay, that's about the indices, Amar, but what about individual stocks for this afternoon? What are you recommending in trade?
Yeah, the first one is a sell on Tata Motors. It's already corrected significantly from almost 164 currently to around 152 odd levels, 153. But Tata Motors, what we are seeing is that the stock did consolidate, but was not able to hold the 164 odd support level, and it has taken that out. So any pullback in the stock towards 157, 159 ideally can be a very good level to short, with the stop loss of 164 and a target of 146 on the downside. And the second stock to look at is Godrej Consumer Products, Godrej Properties. If you look at Godrej Property, what we are seeing here is that Godrej Properties is a stock which looks positive on the charts. So this is one stock which remains positive, and in spite of the sell-off which we witnessed in the markets, this stock is one which has held forth. And technically, it's very strong on the intermediate term trend as well as the long term trend. Short term, we are seeing some, I would say, decline in bullish momentum, but still the momentum remains intact. So this is one stock one can look at. Currently, it's around 925. So these are the levels one can look at buying, 920, 925 levels, with a stop loss of 898 and a target of 968 in the short term.
All right, let's pull up the Nifty auto index if we can, and possibly if you can do an MRR on that one, because we have seen weakness there. That's your intraday chart, of course. That's down by around 1.5% right now. And in terms of stocks too, there is no doubt about the fact that the majority of the constituents of the Nifty 50 will have a decline. So that is an indication of how you're seeing the auto names pan out, and we are looking at a lot of weakness in some of your larger cap names. But Manav, we have been talking to you about the auto sector every now and then. How are you viewing things now, especially on some of the names that you've been tracking? If you could give us an idea about whether or not you do see further weakness in the names.
Yes, see, if you're looking at the charts of Hero Moto and M&M, both these stocks are nearing to its important weekly and monthly support zone. And looking at the overall auto space, it has been declining since past 4 to 6 months consecutively from its recent peak. At the immediate basis, I don't see any risk reward for initiating fresh shorts. But when looking at the overall structure, yes, it is definitely weak. But we cannot rule out for a possibility for the stock to decline and hold on to its support and see a short-term recovery from there on. So at the current juncture, looking at the support of Hero Moto, which is around 2500 odd, it's currently at 2580. So if the prices decline to 2500 and if the prices manages to sustain those levels, I think it would be quite interesting to look into Hero Moto near the support zone. Even looking at the charts of M&M, the prices have already been declining since past quite some time from its peak of 950 and having an important support around 600. So auto as a pack is nearing to important support clusters, And it's at the current juncture, one should not preemptively expect a downside breakdown, but one can actually, for a near-term perspective, look a wait-and-watch approach. In case if there is a bounce back from the support, I believe there could be a short-term trading opportunity for the stock, and one can maintain a bullish stance for a short-term pullback rally into this.
Okay, Nifty Auto right now down about 1.5%. I just want to pull up a few stocks. Pull up the chart of BEML. That stock's also succumbed to some selling pressure. It's down about 6%. And these are all your F&O stocks. It's a day's low, down about 7%. Pull up Walk Hard. That's down about 8% as we speak. In fact, 9.5%. And something like C8, which has been weak, just not in today's session, but in the last many 2 to 3 sessions at least, it's trading at 52-week low. Now remember, these are stocks which also come out of the futures and options market from the July series. So 27th June will be the last trading day in this category. Agam, just an observation, I don't know, the sort of stocks, the free fall we've been witnessing, there are 2 set of stocks. One of them are your high beta leverage counters like Jain Irrigation, the Anil Ambani Group company. So no surprises there. But the second one is all your good stocks also which are falling. So nothing concrete has happened or no major development. Something like C8 or even BEML or Walk Hard, which I just highlighted. You've got the other stocks like Canfin Homes also, which comes out, but that's been trading in the positive territory because of a positive news flow, which has come where promoters have given a go-ahead to sell stake in the company. But that too seems to be off the days. A good time to bring in then Siddharth Khemka, Head of Research at Motilal Oswal Securities, who joins us on the show. Siddharth, good afternoon and thanks a lot for joining us today on the show. What's been your observation or reading with the sort of free fall that a lot of these stocks have been witnessing in the broader markets?
Always pleasure to be on the show. So we are, as you rightly highlighted, yes, there are certain sets of stocks which are having a lot of issues with regards to the leverage balance sheet. The entire issue of the liquidity challenge that has been coming up after the initially the ILFS, and then we saw that expanding to some of the other corporates and promoters borrowings. So that impact has been witnessing for a lot of these companies which have seen a sharp increase in the cost of borrowings. So for example, the likes of Jain Irrigation, where the working capital cycle is very high and they have to depend a lot on the borrowings, and if the cost for them goes up, that impacts the profitability, which anyways is as a very low margin business. So there are other names which are going down. There are 2 impacts. One is the impact on the business because of which people are negative, and the second is some of these names are coming out of F&O, which is leading to some kind of maybe a short. A lot of people are exiting their positions or stuff like that from these stocks, which is leading to these kind of falls. The other names which are falling are mostly names which maybe because of the fear that is going on in the market that they could be a free fall, and hence people are exiting some of these names. Although there is no change in fundamentals right now, but the overall business has been weak for the likes of some of these textile companies which are coming out of F&O, or the Walk Hards, which are again coming out, tire companies which are seeing a pressure on the business because of the overall slowdown in the auto sector. So overall, a lot of factors are impacting the sentiments right now, leading to such kind of fall. And what we are witnessing on ground is that such falls create panics among retail investors, and they tend to expand to other stocks or other holdings of those clients which are not related to the core issue, but there also then because of the selling, the stock price come down.
Okay, Siddharth, the other question was the anticipation of the budget coming, and there is some conjecture in the market out there where there is suggestion that there could be some very hard steps taken up by, of course, Nirmala Sitharaman. Is there anything too much to worry about with respect to the budget and the anticipation, or that is just one of those things that gets considered and that gets attributed because, well, we don't have as many reasons for the kind of correction that we're seeing?
We have seen that in the past as well, that before the budgets, either the narrative becomes too positive, or sometimes people in this kind of panic environment, some of the negative news gets highlighted. So there are a lot of fears about the wealth tax or the real estate tax and all those kind of things, which are creating this kind of panic. To be honest, it's very difficult to say what this government will do. Nonetheless, the current economic situation doesn't make sense for the government to come out with such kind of harsh tax or policies which will impact the underlying business in the economy. So I think more or less this is fear and panic that is getting up in the market. One should wait for the actual budget to come out with. It's not very far from today, and then maybe make a strategy and then go ahead and take the positions.
Okay, let's see whether there is any sort of room for fiscal stimulus in the upcoming budget or not. But for the time being, I think Bank Nifty has also slipped into the red. And by the way, one of our techies were talking about yesterday's lows. So we're somewhere around those levels of yesterday's lows. Nifty is trading around the mark of 11,650 as we speak. And I think we have a query coming on Escorts. One of our viewer, Deepi Adhikari, wants some support level in this one. And this too has been trending lower as we speak. This counter is sitting at days low with cuts of about 2.5%. Amar, if I could come to you in Escorts, if somebody is holding a position here, what sort of support levels would you advise?
Yeah, looking at Escorts, what we are seeing is that Escorts initially had made a low of 545 on 15th May. So that low has been taken out and currently it's around 523 levels. Technically, looking on the charts, I would say crucial support for the stock is somewhere in the region of 495, 500 levels, because that's going to act as a very strong support zone. But technically, I would say on the monthly charts as well as the intermediate term trend, the stock continues to remain bearish. It's been in oversold territory for quite some time, yet the selling pressure is not seeming to decline. But I would say somewhere around 495, 500 levels could be a level from where the stock could witness some temporary respite. However, on the upside, the stock needs to trade above 550 levels for any meaningful rally.
Okay, the other question here is Canfin Homes, because at least in the morning it looked very strong. This is of course after we understand that its parent Canara Bank has given approval for the stake sale of Canfin Homes, and while it did start off the day with a lot of strength, it has come off, but I suspect this is also largely to do with the fact that we've actually seen a correction across in the broader markets. Again, a lot would want to know about the fundamentals of Canfin Homes. So I'm going to take this question up with Siddharth. Siddharth, firstly, if you do have coverage on Canfin Homes, what's your view here? If not, what is your view on the space, and if there is any idea that stands out for you or you'd want to absolutely avoid considering the kind of challenges that the sector has seen?
Yeah, Agam, so we don't have coverage on Canfin Homes. So the view on the overall housing finance space is a bit cautious currently. Bearing a couple of names, most companies are facing a huge pressure in terms of business. One is obviously the liquidity issues which are creating the cost of funding is going up, and the second is this slowdown that we have seen in credit growth, especially for the housing finance companies. So from a high base where these companies were growing in excess of 30% on a consistent basis, the growth has come down to 10-15%. And we have seen that a lot of these large corporate banks have now become aggressive. Some of these PSU banks have become aggressive in this space. And the entire housing space has also seen some slowdown because of the overall cost of interest cost which had gone up. We all know that while RBI has cut interest rates, the same has not been transmitted. Most of the NBFCs, most of the housing finance companies have been increasing their the lending rates, which has some kind of deterred fresh purchases and led to this kind of credit slowdown in the housing finance space. So having said that, some of the only few names, you either stick to some of the larger ones like the HDFC Limited, which has a very good credit profile, still manages to get a lot of public deposits at low cost, and hence the business continues to do well. The only concern would be again the entire the slowdown in the entire housing credit industry. And the second name is a smaller one, is LIC Housing Finance, which historically has not grown at a much faster pace, and even in this environment continues to do a steady growth. Valuations for LIC has been very comfortable. The cost of funding has gone up, but that is still manageable. We believe that the return profiles are increasingly improving, and that should stand out in an environment where others are facing a huge headwind. So these two names clearly stand out in the housing finance space.
Okay, pull up L&T Finance Holdings. I think that's the latest one now to witness that sharp fall, almost at day's low, sitting with cuts of about 8%. L&T Finance Holdings is now trading around the level of 108. Manav, what do you make of the fall here? Would you recommend taking any position, or let's say if somebody already had shorted the stock, is it time to book profits?
Yes, in fact, the prices have seen a good breakdown from its important support zone. So in such a situation, since the oscillators and the trend is definitely bearish and the sentiment is quite negative, one should maintain a trail stop loss and not book the entire part. But the trail stop loss can be placed at 115 on the upside, which is its important resistance. Looking at the overall formation, I think on the lower side, 102 could be a level which could provide a short-term support, and one can look to book part profits on the lower side. Overall trend remains negative. I don't recommend that one should go for any bottom fishing for long positions, but yes, if somebody is holding short position, should continue to do so.
Okay, let's also pull up Dabur, because that was one of the weaker counters in the FMCG space yesterday, of course, following a downgrade coming through by a brokerage. Today it's at 380, and we've seen further weakness here, currently at, well, not trading at day's lows, but somewhere around there. Well, Amar, if I can come to you on Dabur India, how are you going to trade this one? How is it poised, and makes sense to initiate fresh short positions at this level?
Looking at Dabur India, I would say that technically Dabur India definitely is displaying some weakness on the charts. So I would say that, however, on the downside, the stock has got very strong support coming around 360, 365 levels. So there is a possibility that we could see the correction towards those levels, but not at shorting is definitely not recommended at these levels. Ideally, a good level to short would be somewhere around 387, 388 levels, because technically in that case the stop loss needs to be above 396 levels. So that could be a level one can look at going short. But yes, the trend remains bearish, and we could see some further sell-off on the downside. As I mentioned, somewhere around 360, 370, that's going to be a support zone for Dabur.
Okay, the stock's down about 2% in today's session. Just want to highlight a few stocks. Pull up Gati, that's also witnessed a sharp fall just in the last half an hour or something. That's a Gateway Distripax. Now I'm talking about Gati, the logistic company. Gati is down about 14 to 15%. Arvind is the other one. That's another your F&O counter right now. Arvind's also seen sharp cuts of about closer to 14%. And Piramal Enterprises, remember, after selling their stake in Shriram Transport, well, the moves have been divergent. Piramal Enterprises have been trending lower, and there has been recovery which is seen for something like Shriram Transport. So 7% lower as we speak for Piramal Enterprises. So that, before we let you go, do you guys have coverage on Piramal Enterprises and on Shriram Transport? If yes, what have you made of Piramal Group exiting the entire stake in Shriram Transport?
Yeah, so Piramal, we do have a coverage with a positive view. We have been liking the overall company's business, which had been growing until recently, when the entire liquidity issue has impacted them as well. The core business, the lending business, they have a huge exposure on the developer side, which is facing some stress, and that has led to some decline in profitability. They also have exposure to some of the large developers where again the credit ratings have come down, which has led to a kind of question mark on how sustainable would be, or whether there could be further challenges in terms of growth. Bearing that, if you see on a longer term basis, the business strategy has done well. Coming to the stake sale in Shriram Group, I think that is something which was on the minds of the promoters, basically because the earlier strategy of getting into finance and basically retail finance through Shriram Group was not going as per the original plan, and that is why we saw Piramal getting into some of the NBFC business on its own. So, for example, Piramal Housing Finance, which started recently, they have their own NBFCs, and then there were so the lack of synergies between the two which led to some kind of this decision, and the cash that they get from this sale stake of this sale would definitely help in this kind of environment where raising money is becoming challenging in this challenging environment. So on the face of it, it looks a positive development. However, the current stress on numbers could remain until we see some easing of liquidity, some stability in the bond markets. Post that, we could see the stock price stabilizing. Right now, as the fear or the cautious stance in the market is spreading to a lot of these names, especially in NBFCs, we saw that in L&T Finance as well. So that is something creating this kind of fall. Once it stabilizes, once some clarity emerges, I think over a longer period, the track record, the promoter, they have a good brand name, the business model is pretty strong. It should do well, is what we believe.
Okay, Siddharth, we'll let you go on that one. Thanks so much for joining in this afternoon and talking to us about your ideas on the Indian markets. But, well, there is another sector which is actually doing well and bucking the trend, and I can perhaps guess as to why it's doing well too. We have the likes of Blue Star, Symphony, as well as Voltas, all these stocks advancing in trade today. And as you can see, the likes of Blue Star and Symphony are actually advancing by well over 3%. So these stocks are clearly bucking the trend, going against the tide, and maybe, just maybe, well, there are at least some pockets of the markets maybe anticipating, well, an increase in air conditioning sales, given the fact that there has been a delay in monsoons. Do remember that this is one of those sectors which is, well, very prone and very well dependent on the seasons, and as we all know, we have had a lackluster monsoon at least in the first 2 to 3 weeks of June so far, and possibly that's the reason why, well, at least some may be buying into these stocks. But that said, I also want to pull up Biocon, because Biocon is also having a good day of trade. What we've seen in Biocon is some very interesting and I would say volatile moves too over the past 1 week or two. And it's currently at 250. Manav, can I take up Biocon with you and take your view here? How are you anticipating movements here, and what would you do if you were to trade into the stock?
See, the prices have recently declined sharply from its recent peak, and overall the trend has been quite negative. Yes, it is bouncing for a simple reason that the oscillators are seeing some sort of a bounce from its oversold levels. On the upside, 260 and 265 are stiff resistance. So there is a very short-term upside room for this stock, even though if there is a bounce back. But I sense there will be a series of resistance around 260, 65. So unless we don't see a price breakout and close above these levels, I don't sense any short-term reversal coming into the stock. But eventually, any short-term pullback, one can also look to initiate short positions on the higher side. So one needs to only turn bullish once if it closes above 265. Till then, I think till then Biocon is still in a short-term downtrend, and one can expect lower targets into this.
Okay, that's Biocon for you. Last 6 months, the stocks corrected about 21%, and markets have been trading below the mark of 11,650. Remember, we breached yesterday's low of 11,641, and for I think good 5 or 6 minutes, we've traded also below that mark. Bank Nifty is now down about 74, which is inching very closer to its 50 DMA, which is close to about 3,200, and Nifty already is trading below its 50-day moving average. All right, as we slip into a break, one of IndiaMart's investors is looking to sell stake via offer for sale. Intel Capital wants to sell about 9% stake worth nearly 475 crores. To know more about the proposed offer, Ashwini Priolkar had a chat with founder and CEO Dinesh Agarwal. Listen in.
So we have about 4.8 million shares which are being offered for sale, and at the price band of 970 to 973 rupees. So IndiaMart investors are Intel Capital, Kona Capital, MADS Capital, Westbridge Capital. So out of 3 investors are participating into the round. So Intel Capital, who came in FY09 at IndiaMart, they have completed 10 years. So they hold about 13%. They are selling about 9% of their capital. And another 2% is coming together with Kona Capital and MADS. Westbridge is not selling anything. and the rest of the capital is coming from the promoters and other shareholders.
Right. So does the company require any fresh equity in the coming few years, and what is the cash you're sitting on?
So IndiaMart business model is a negative working capital business model. If you see last 3 years, our revenues has been growing at about 29% CAGR, and last year revenues was 548 crores. At IndiaMart we did an EBITDA of about 82 crores last year.
Okay.
And since it's a negative working capital business, we collect monies in advance for 1 year, 2 year subscription. We collect a lot more cash than EBITDA. So last year IndiaMart generated a cash flow of about 255 crore rupees.
Okay.
So we have a deferred revenue of about 586 crore rupees, and cash on the balance sheet is about 685 crores rupees. So we already have about 685 crore rupees. Out of that, 255 crore rupees were generated from cash flow from operation last year, and I hope that similar cash internal accruals will continue. So at IndiaMart, I don't think we will need more money coming in for the subscription for the expansion by way of equity.
And what is the debt figure right now?
There is no debt. IndiaMart is a debt-free company.
Oh, okay. And so how are you planning to increase your revenue? As in, what are your some of your plans for scalability?
So if you really see, IndiaMart has 1,29,000 paying customer and 5.5 million total suppliers listed on our platform. We are only 3% or so paying customer for the overall listed base. And if you see overall 1.2 crore SMEs are there who are registered out of GST network. So I think there is a lot of scope of increasing our customer base. Over the last 3 years, if you see, our customer base has been growing at about 20% CAGR, whereas our revenues has been growing at about 29% CAGR. So this includes two things. One is increase in customer base, and second is increase in the revenue per customer. So both together will continue to act as a revenue driver for us.
Right. So now you're the largest B2B player in this sector, which connects suppliers to buyers. Now give us some details about your business model in terms of how many registered suppliers and buyers you have on your platform right now.
So total registered suppliers are about 5.5 million registered suppliers. They display about 61 million products and services coming from across 97,000 different product categories and different industries. However, buyer base is about 83 million registered buyers today. Every month we do about 137 million 37 million matchmakings total, not 100. 37 million matchmakings every month. So buyer and supplier connects are happening, and thereby generating revenues of about 548 crores last year for IndiaMart.
Correct. How do you see yourself in this e-commerce space in India? Do you see some tough competition from other top players, and how do you plan to reach out to more subscribers?
So as I said, reaching out to more subscribers, we have a sales force. We have about 3,000 people as our employees, and only 500 people of them are in product and technology. Rest of the people are in sales and servicing. So they help us educate SMEs on everyday basis to convert them into a paying customer. As far as competition goes, some of our nearest competition that are mentioned into the document, we are about 10x of their traffic today. And B2B market size is about $700 billion market size in coming 2 years. So I think there is a lot of scope possibility for many players to come and work on this platform. Currently there is a 60% share of the B2B revenue is only at IndiaMart. I think healthy competition would help us create a bigger market and create a easier doing business for India.
I was going through some of the risk factors that you have mentioned in the document, and policy changes and other things are mentioned in it. So do you think the kind of atmosphere that is there today for the e-commerce company, how feasible it is, and what are your worries about some changing policies, or how do you see the environment right now?
I think India has a good bureaucracy and good politician. Together we have been able to sustain any crisis that has come either internationally or nationally. So I think we have good policy makers, and I continue to believe that our policy makers will do everything which is in the interest of small and medium businesses of India, and which is in the interest of employment in India.
do you plan to maybe reach out through in terms of advertising or other means to more of the retail customers as well? Because right now your model is fixed to the supplier and the buyer side, like more of a B2B. So any plans of that in future?
I think we will continue to focus on our B2B business because B2B is a much larger opportunity and there is a lot to be done. There are many players who are already doing it in B2C domain. I think we will continue to focus on B2B, though we will increase our focus on larger enterprises. We will increase our focus on SaaS business, software as a service for SMEs. We already have launched a CRM system which is highly successful in the SME community. We are looking at accounting, invoicing, order management, those kind of SaaS software. We already have launched a payment facilitation and payment facilitation platform, and we will continue to look at credit aggregation and credit platform and other fintech opportunities in that.